Good morning and welcome to our first tutorial. So today we will be looking at an exercise from chapter 2, that's exercise 2-22. So in this exercise we are asked to prepare a schedule of cost of goods manufactured as well as an income statement. Now this question it covers uh, learning outcome 2.1, 2.2, 2.3 and 2.4. So we're given some information here about Wallace River Company for the year ended December 31st, 2024. And we're told that it has raw, uh, raw materials purchase, right? So that's 90,000. Then it has raw materials at the beginning, ending raw materials, depreciation for the factory, insurance for the factory, direct labor, maintenance for the factory, admin expenses, sales, utilities for the factory, supplies for the factory, selling expense, advertising expense, indirect labor for the factory, work in process at the beginning, work in process ending, finished goods, and finished inventory. All right, so what it asks us to do? To prepare for number one, a schedule of cost of goods manufactured. Then number two, prepare an income statement. Number three, assume that the company produced 10,000 units of goods during the year. What was the average cost per unit for direct materials? What was the average cost per unit for the factory depreciation? Number four, assume that the company expects to produce and sell 15,000 units of product during the coming year. What are average cost per unit and what total cost would you expect the company to incur for the direct materials and for factory depreciation at the level of activity? Assume that the raw materials are charged by suppliers will not change next year. For factory depreciation, assume that the company uses straight line depreciation and that the factory unit equipment has 5 years of useful life remaining. And a third one, explain any difference in average cost per unit between 3 and 4. All right, so we're going to start with 5, preparing the schedule of cost of goods manufactured, right? And remember that in a manufacturing environment, usually we do a cost of goods uh, a schedule of cost of goods manufactured. Reason being, when you're dealing with a manufacturing company, right? Company will have raw materials. This raw materials will be transferred to work in process. Then after work in process, would have use conversion cost to convert that raw material into finished goods. That finished goods will then be transferred to the finished goods inventory, right? So a lot of this the company will first have to sort out, right, by deciding what's the cost of the goods that was manufactured during the period. Then this would again get transferred over um, into finished goods, and then we can do our income statement, right? So pause the video and try to prepare the schedule of cost of goods manufactured. All right. So here is the solution for the schedule of cost of goods manufactured. So we're going to start with direct materials, right? Because it's usually the first thing that gets transferred out into work in process, right? All right. So we have raw materials. At the beginning of January was 10,000. Then the company purchased new raw materials, 90,000. So total raw materials now available to it would be 100,000. At the end of the period, that's on December 31st, there were 17,000 units of raw material that were in ending inventory. So we have to deduct that amount from the total raw materials available, and now we know the total amount of raw materials that was used in production. So we know that this is the total amount of raw materials that would be used in production. So we were also told that labor was 60,000, right? Direct labor right here, 60,000. So that will then get added. So the third thing that we have to add would be the manufacturing overhead. So we have to find all those items that would be part of manufacturing overhead, put them together, and then the total manufacturing cost would then be added to your direct materials and direct labor. So what are those manufacturing? Again, remember that our overhead, manufacturing overheads are those manufacturing costs that we are unable to directly apply to direct labor or to direct materials. So then they get put into manufacturing overhead. So in the question like this, you're going to go look at the information that is given. And if it tells you that the information is about the factory, and it's not direct labor and it's not direct materials, then it's going to be part of your manufacturing overhead. All right, so we look here, we can see we have depreciation, right? It says factory. We have insurance, it says factory. We have maintenance, it says factory. We have admin expense. No, that's not factory, so we're going to ignore that one for now. Sales, that would be part of our income statement, so as well, we ignore that for now. Utilities, factory, so again, another one. Uh, Supplies, factory, right? So again, another one that will be part of manufacturing overhead. Selling expense, we know that's not part of manufacturing, that's part of our period cost, as well as advertising expense, right? Indirect labor, factory is a part of manufacturing overhead, and the rest is between inventory for work in process and finished goods, right? So we know we have identified the ones that would be part of manufacturing overhead. So again, depreciation, insurance, maintenance, factory utilities, factory supplies, and indirect labor. That these all get added total together, and then it will be added to direct labor, direct material to give us the total manufacturing cost during the period. So now we know the total manufacturing cost during the period. What we're going to do, we're going to add work in process to that, right? So that's the beginning work in process, the amount of goods that were partially converted at the beginning of January. That's our work in process, right? So that's now added to the total manufacturing cost for the period, and that gives us 320,000. So from that, we're going to deduct the ending working process. So those goods that we're working on at the end of a period. So on December 31st, what's the goods that were partially converted, right? So these are the goods that are ending working process. And so we find that our cost of goods manufactured would be $290,000. So $290,000 of goods were manufactured, and this is what we're going to now transfer to our finished goods. All right? So that's the first step to prepare our cost of goods manufactured. What's the next part of the question is to prepare our income statement. Again, you can pause and then try to prepare your income statement and then go back to doing it. All right, so remember that in preparing our income statement, we need items like sales, right? We're gonna need, we need to know our beginning finished goods, ending finished goods, and what goods were transferred in, right? We need to know all of that so we can find our gross profit, then moves into finding our operating profit, right? So we know importantly as well, we're gonna need selling expenses, advertising expenses, and admin expenses. So any expenses that are not part of our our manufacturing costs and and are considered to be period costs will now be put into the income statement, right? So these costs will go directly to our income statement. All right, so let's jump to the solution for our income statement. All right, so again, we start with sales, and then we're going to determine our cost of goods sold, right? So we know finished goods inventory, right? Finished goods inventory opening was 10,000, and here we go, and closing was 40,000. So ending finished goods inventory 40,000, open finished goods inventory 10,000. Right. So here we go. So at the beginning of January we have 10,000. Then we transferred from cost of good manufactured 290,000. Right. So this is coming directly from the cost of goods manufactured. So that gives us total goods available for sale, from which we will deduct the uh, ending finished goods inventory. Ending finished goods inventory 40,000. So that will be deducted, and now we arrived at our cost of goods sold. From there, we will take cost of goods sold from sales to give us our gross margin. So gross margin 190,000. Now we have to take away all those operating expenses, right? So remember what those are. All these are considered to be period costs, right? So these period costs, and there are selling and admin expenses like adminis administrative expenses, selling expenses, and advertising expenses. So all three of them, are now deducted, and now we arrived at our operating profit. All right, so we have established our operating profit, right? So now we have completed our schedule of cost of goods manufactured. We have also completed our income statement. So the third part asks us to assume that the company produced 10,000 units of product during the year. What was the average cost per unit for direct material, and what was the average cost per unit for depreciation? All right, so if we look at the two items here that the company is asking us to, that the question is asking us to look at, one is direct materials, and the other one is factory depreciation. Now, direct material. Let's take direct material. So direct material is a variable cost, right? As you produce more, you will use more direct material. As you produce more, you will use more direct materials, right? If you produce less, you will use less direct materials. Hence, it's a variable. So it's a variable cost. Now, when we look at the factory depreciation, on the other hand, if we use more, the factory, we're using straight line depreciation, so it will be the same amount every year. The amount given here is $42,000, right? So every year we're expecting that a depreciation amount will be $42,000. It doesn't matter because it's a straight line depreciation. We take the total amount and we divide it over 5 years, right? So it will not change. Therefore, it doesn't matter how many units of goods are produced, it will remain 42,000. So we realize that the factory depreciation is fixed. All right. So now that we have determined that the direct material is variable and the factory depreciation is fixed, we can now go ahead and do our calculations. All right. So direct materials, right? What is the level of activity? The level of activity is 10,000. So we're told that for this year, right, we would produce 10,000 units. So this cost that we have here for direct materials is for 10,000 units. That's what we're told, right? It says assume that the company produced 10,000 units of product during the year, right? So therefore, we know that we have used 10,000, um, $83,000 to produce this 10,000 units. So we can find the cost per unit based on that. The cost per unit would be $8.30. Then we were told that for factory, it is 42,000, right? Remember that is also fixed, and we have already determined it to be 42,000 as given. All right, so for 10,000, the cost per unit is going to be $4.20. So now remember one thing, right? Remember one thing, when we're dealing with direct materials, the cost per unit is going to remain the same. When we're dealing with fixed, so when we're dealing with a variable cost, I should say, rather than just direct materials, so more general. When we're dealing with a variable cost, the cost per unit is going to be the same. When we're dealing with a fixed cost, the cost per unit will change, right? Because as the levels change and the amount is not changing, the cost per unit is going to change. All right, so now we have done that. So that's number three. We can jump to number four. And number four, it says, um, assume that the company expects to produce and sell 15,000 units of product during the coming year. What average cost per unit and what total cost would you expect the company to incur for direct materials and factory depreciation at this level of activity? Assume that raw material costs are charged by suppliers will not change next year, right? So we know raw material cost not going to change, so therefore it's going to be $8.30 per unit. For factory depreciation, assume that the company uses straight line depreciation and that the factory has 5 years of useful life remaining. So therefore, company uses straight line depreciation, 5 years of useful life remaining. So it's going to be the same amount every year, 42,000. All right. So now we established that. Let's go to four, and four should not be looking like this. So let's fix this so we can see exactly what's written here. There we go. All right, so here we go. So what are the two things we know? So one, we know that the cost per unit for raw materials is going to be $8.30. We know that the level of production that we're expecting is going to be 15,000. So therefore, we can find direct material by multiplying cost per unit by the levers, right? Cost per unit by the levers, and that gives us $124,500. How about for factory depreciation? So with regards to the depreciation total cost is not gonna change. So it's going to be $42,000. All right, $42,000. So levels activity will be 15. So we know the cost per unit is going to change. So the cost per unit for factory depreciation, because the amount is fixed, will now and we are now going to be selling more units. The cost per unit is going to fall, and it's going to be $2.80. All right. So five, explaining the difference in the average cost per unit between three and four above. Right? So we know that direct material is variable, so that the total amount change with the levels of production, right? The total amount. So total cost here is going to change with the level of production. So remember when we were producing 10,000 units, it was 83,000. Now that 15,000 units are being produced, it's going to go up to 124,500. Importantly, the cost per unit remain the same, right? Cost per unit remain the same. The manufacturing, the factory depreciation, on the other hand, which is a fixed cost, it's not changing. The total amount will remain the same, irrespective of the number of units produced. You can see that in 3 here, when 10,000 units were being produced, the unit cost was $4.20. Now that 15,000 units will be produced, the unit cost will fall to $202.80. So again, because the factory overhead is fixed, so that the total amount will not change, right? But the cost per unit will change. All right. I hope that explained the question to you. You can, replay the video if you so like. If you have any questions, just email me and I will respond to you. Good luck doing these. Good luck doing the exercises that are there. Make sure to do them by the end of the week. And by the way, guys, remember that your first assignment is already open. So get going. See you guys next week.